And that means we are live here on YouTube on our daily stock market show where we break down all the financial markets, the news, and everything else. The halftime report from Tackled Trading. We've got Matt, we've got Mark, we've got Tim, and Cody, always making sure we're all staying in line there. Cody, great job on the production on the back end. Mark, how are you doing today?
Oh, my goodness.
I mean, that's the point of pleasantries, right? I mean, even in the middle of a storm, you're like, all right, how's it going? You know,
Tim, I think it's just you and Mark, because when I asked Mark how's he doing on Friday, he's like, I'm doing fantastic.
Well, I triggered him last week, talking about his dreams. I'm sure I'm going to hear about that on the podcast. Matt, how you doing today, brother?
Tim, I'm excited to be here with the halftime crew and to analyze the market. And obviously the market's responding bullish here today, and we're going to break it down for you.
Well, there's a lot going on. There's no question there's a lot going on across the Federal Reserve and international banking as well. The Bank of England, I heard, the Bank of Japan, they're all going to be cutting rates. Markets are rallying after.
Get used to one phrase: coordinated global central bank action.
Yeah.
Coordinated.
Let's talk about it.
Coordinated global growth. Coordinated central bank action.
Even over the weekend, guys, I was watching the futures market, and it was not very clear that we were going to have some big rally coming into the cash open. Volatile up and down. Even last night, it was selling off before, a couple hours before the open. Now we are taking off here. Do you trust the rally? Let's start with that. Mark, I mean, obviously, we have a huge rally W pattern on this intraday chart. You're above short-term moving averages. You've got a little pocket here it could rally into. Is this a V-shaped bounce that we're dealing with?
I mean, to answer that question, and your own belief to the answer to the question is how alive and well is the FOMO buy the dip sentiment out there still in the world? Because historically, and we've seen this for 12 years, you buy the dip, you buy the effing dip, you buy the dip, you buy the dip. It's almost become this comical. Of course you do. This faith in the Fed put, the faith of government intervention, the faith in money managers that no matter what happens, central banks will stabilize it and all things are rosy ahead. Now, if you still believe without a question that narrative is still alive, then that's going to answer where you stand on the question. Mm-hmm. That is not my personal stance. I believe that there are external factors that monetary policy cannot control in the short term. Mm-hmm. Does that mean we're going to have a V-shaped recovery? I just think that is wildly optimistic.
I think it's really early for that as well, Mark. I'm with you 100% because there's so many different parties to this playing itself out, Mark, and I'll let you finish your thought. But this buy the dip, maybe it could be day traders here. Could be just the fact that it did break out of resistance. Day traders are buying it back up.
The one thing we do know, and we have a lot of history of that, whatever this means for the next day and the next day and the next week and the next week, there's a lot of debate and analysis and things we can do. We know in ongoing news stories that whatever the news du jour of the day is, has a tendency to really, really have massive days. We've seen 2 years of trade war evidence of this. Previous to that, when you'd had ongoing news stories previously in the last 12 years, you saw the same type of evidence, whether it's monetary problems in China, whether it was the Ebola scare for a few days 4 or 5 years ago. When there's an ongoing news story, trading ranges expand. Mm-hmm. Trading ranges expand. And when trading ranges expand, the momentum that builds off of algos, day trading, short sell covering to the upside has always been massive, much bigger than normal. And it goes the other way too. And we saw that last week. So we're at a point, and it's not a permanent point in my opinion, but we're at a point in the cycle where the news du jour of the day is going to win out on that day. I mean, it has constantly over the last 6 trading sessions. Mm-hmm. Not a whole lot to believe that that's not going to be the case moving forward.
Matt, last week was one of the biggest one-week sell-offs we've seen in markets in a very, very long time. I think back to 2008, I believe had a 14% sell-off in 5 days during a 5-day period. And in many of these conditions, Matt, when you look at it historically, like in 2008 or in 2011 after the government shut down and was down 13% in a week, or in 1998, or even after 9/11 when it was down 12% after that, the market did bounce back in a V-shaped rally. Do you think traders are buying the narrative, number one? And number two, are you buying the narrative?
I think Wall Street's buying the narrative of rate cuts. I think they're buying that narrative. And it was just on Friday, guys, where James Bullard, basically a central bank member, where he said that they were not ready to act. It was just on Thursday of last week where Christine Lagarde of the ECB said they were not ready to act. And then all of a sudden, over the weekend, as we've seen this coronavirus really expand, but it wasn't really the coronavirus. To me, the expansion of the coronavirus, I don't think that's what kind of brought the banks together in the mindset that they were ready to act. I think what happened, and I talked about it last week on Monday when you were here, Tim, I said the number that we all need to be focusing on this week is on Friday night when China, releases their PMI numbers that will reflect kind of what's happening from an economic perspective. And China came out last Friday night, and I tweeted it at the time, thank God the market's not open when this report came out, because Tim, it was a horrific number from an economic perspective. You came in right here, and you can see it right there on the Chinese manufacturing PMI number. That came in at 35.7. Now, anything underneath 50 on a PMI report is showing contraction from an economic perspective. Now, we all knew that China was going to contract economically. We all knew that. What we didn't know was how deep the contraction was going to be. We were concerned from an economic perspective of supply chain economics and so on and so forth, both from a small business perspective as well as a large business perspective. But I don't think anybody was, including the central banks, mind you, I don't think anybody was ready for the worst number in recorded history from a Chinese economic perspective. Now, that recorded history only goes back to the mid-2000s, but that was before the mid-2000s. China was not a manufacturing economy. It was really, kind of just feudalism in the 80s and 90s. So we only go back to the mid-2000s from a Chinese economic perspective. But when you saw this number right here come in at 35.7, and you look at the trend here. This is Chinese economic data over the course of the last few years. Here's Chinese economic data when the coronavirus hit. Now, that number, 35.7, is a disastrous economic number. I mean, just worse than even I thought it was going to be. I thought it was going to contract, but not to the worst in recorded history. And so when that happened on Friday, I don't know what happened. Nobody does. But all of a sudden, central banks around the world, news comes out on Sunday night that the Bank of Japan through Corrado is ready to act. The Bank of England is ready to act. The ECB through Christine Lagarde is ready to act. And the FOMC is ready to act. And when you look at the FOMC CME Fed Watch tool, Tim, last week we were looking at maybe a 57% probability of a 25-point basis cut in the Fed Fund futures rate. Right now, the market is pricing in not a 100% decrease in a 0.25 cut. They're pricing in a 50 basis point cut from a central bank response. Now, guys, to put that into perspective, the last time they did this was September of 2008. They went back to back with 0.5%, a 50 basis point cut, and then they went to a 0.75 basis point cut. Guys, the simple reality is we're staring at zero interest rate policy, and it's just a matter of time. It's just a matter of time. So let me finish my thought real quick. So to me, yes, the coronavirus is a scary situation, but I also think there's a certain demographic out there that is just accepting it as part of the norm to a certain extent. Now, I disagree with that, but I do believe there's some on Wall Street think, okay, this is something that's going to happen. It's going to go away. But the Fed has been the number one driver of all market activity, even in the face of disastrous economic reports out of 15, out of 16. The market still kind of responded bullish in spite of that negative economics because of the Fed acting. So, to answer your question, a little long-winded way to answer your question, but yeah, I do believe that today, i.e., today, the Wall Street is buying that narrative. Now, can it sustain? Are we in front of a V-shaped recovery that, we saw in January and February of 2019 coming out of that 20% decrease in price action in November and December of 18? I think we're still new there. But from a technical perspective, when you look at this on a daily chart, yeah, you're a little concerned about the 200-day moving average and so on and so forth. But when you drop this down into an intraday chart and you see this very consistent trend line happening every time it peaked, every time it peaked, every time it peaked, every time it peaked, even last night when the Fed, when the market opened up, the market was rallying, kind of got hit back down based on that trend line. And now you broke back up above that trend line. It broke out of that trend line. It reclaimed that 3,000 handle, and you have a lot of slowing momentum right here as well. So, you know, I think sometimes we can get a little fixated on the news of the day. But if you're looking at this from a technical perspective, that's a reversal pattern on the intraday. A breakout of 3,000 is important, and I think maintaining that 3,000 level is very important. I don't really care about the 200-day moving average on the S&P 500 here. I care about the market maintaining that 3,000 handle.
If it can break above 3,000, rallies all the way back up to 3,200, and back to the original questions, and I love the answers here, guys. But don't you think a lot of those people who might be buying into the narrative now will look for an exit point at some point? They would be very quick to get off of their opinion.
Today, we don't know.
We don't know that. We don't know that. So we're having this rally. There's obviously a lot of strength on the back of this expectation of the global coordinated, what'd you call it, interest rate cuts that we're going to be having.
Coordinated central bank action.
We got to have like an acronym for that. I mean, we got to shorten that somehow.
Just call it the Bank of International Settlements.
The BIS, definitely going to be cutting rates here. By the way, Trump on Twitter, Matt, and even in a speech on Saturday, he was calling for Jerome Powell to give the U.S. the lowest rates in the world.
Trump doesn't know how interest rate policy works, so let's just stop that.
It was a crazy statement to me.
Listen, I'm not an anti-Trump. I'm not a pro-Trump. I'm a policy guy.
Yeah.
There's some policies I support out of the Trump administration. There are some policies I do not support out of the Trump administration. And quite frankly, interest rate policy, he doesn't understand how money works.
Yeah. Yeah. He keeps calling for these cuts, and they're going to give them to him, by the way.
He also thinks you get paid to borrow money if you're a negative interest rate. And again, that's not how it works.
Cody?
It's not. That's not how it works. Not how any of this works. I was saying in pre-production, it reminds me of that commercial where the old lady's like, and I just post these pictures here on my wall, and they're like, that's not how this works. It's not how any of this works.
Yeah.
Let's go to negative interest rates so we all get paid to borrow money. Again, that's not
how this works.
And we will break down some individual companies here in just a minute, Matt. Move on to the dollar chart if you can, because with this Fed cutting rates by 50 basis points in March, if that does happen, the dollar is collapsing here and currency is weakening. Obviously, that is just a wild chart. If you think about the breakout and the rally, and the dollar had traction there, Matt, before all of this news kind of hit. The dollar is now back down to 97 after it touched that 100 handle. What's your read here on the currency markets?
Craziness.
Yeah.
I mean, I can make some stuff up, but it's all craziness. I mean, the reality is we felt like, and when I say we, I mean the market felt like we were going to get some central bank action, right? I don't think many of us expected that 50 basis point cut. And by the way, they're also pricing in another cut in April of 0.25, and that's like 70% probability. So if the Fed is going to aggressively act from a monetary perspective, and they're going to pump in a ton of money through stimulus programs, yeah, obviously, when you increase the supply of anything, the value of that will go down. If you increase the amount of shares in the open market, the value of that will go down. If you increase the liquidity of the United States dollar, the value is going to go down. I think, like I said last week, that trading Forex right now outside of day trading is a very difficult thing.
Yeah, there's no question about it. I mean, if you look at those charts and those patterns, I expected to go look at some of the other currency pairs and see a bunch of money moving into things like the yen, Matt. Actually, the euro is what's taking off so much, probably just because it's the direct trading partner with the dollar.
26% of all trading happens on the euro dollar cross pair, and nothing's even close.
And the euro is snapping back right now. Let's move on to crude oil and talk a little bit here. Obviously, there's a lot going on with crude oil, and that breakdown was real. A failed breakout in mid-February. This whole market risk came in, and boom, it just took it on the chin. Down for about 7 bars in a row, Matt. Now we're coming back off the bottom like the rest of the risk-on assets in the market. Mark, 5.5% rally. OPEC is meeting this week. What's your expectations for crude oil in the short term and even in the long term? I mean, what's your read on this market right now?
Listen, for stocks and for oil alike, The big narrative moving forward that is dwarfed by the headlines of escalating cases and deaths is the economic impact of the coronavirus. The stocks are rallying because the International Monetary Fund pledged to use, and this is the exact quote, available instruments to the fullest extent possible, including emergency finance, policy advice, and technical assistance. Triggers, algos, short sellers covers, blah, blah, blah. We all know how that plays out on those kind of news headlines. What gets lost in days like this is comments from the Organization of Economic Cooperation and Development, who became the first international organization to sound the alarm on the coronavirus on Monday when they said the world economy is at risk and slashing their growth forecast. Headline news such as the IMF and World Bank or a Powell speech or something out of the White House, that's going to trigger a big algo response. Lost in this is this growing, huge, massive narrative that is starting to build about real world effects on the economy and individual companies. It's not as sexy on any given day. It's not overwhelming on any given day, but that sentiment in oil traders specifically, and it will bleed over because oil traders tend to be a little ahead of things on some things. That sentiment is going to build in oil that no matter what OPEC does, and it appears that Russia's on board, which causes, once again, a huge.
Russia's always on board at oil at 45.
Yeah, it's amazing how they come in at certain levels.
Yeah.
It's almost like those levels matter to Russia. But there's real economic impact that is going to be felt at a minimum, even if the coronavirus is contained. And once again, that's a big if. And even if there is a vaccine in the short term, there is a bleeding effect that's going to have on the price of oil, because the economy is just going to be really in rough shape worldwide. I don't think there's any debate about that any longer. It's now the only debate is, okay, are we not growing very much or slight recession, or are we going to have a real huge gigantic fall off? I mean, that's really where the debate is, and that is like oil is very dependent on the global economy. That's obviously going to be felt, and so this is going to be an albatross on oil's neck moving forward. It's just that those numbers are going to be terrible, and they're going to continually be terrible.
And I think that's really the big discussion across all markets, including oil here, Mark, is this a short-term disruption that will be priced in for Q1, maybe Q2, and that the market will then eventually kind of move forward? Or is this something more? I mean, it will disrupt global supply. There's no question. And demand.
Again, I don't think it's a debate. It's something more. It's just a matter of how deep does the economy.
It wasn't a debate 3 weeks ago when we were having these conversations as the market was ignoring all of this. It is going to impact. I mean, out of all of the things we were most passionate about, Matt, when we were discussing here on that time, is like, this is going to have an economic impact. That's not even debatable. We use that phrase. It's not even debatable, countless times, because there's no way you can.
Even though, Mark, even though the talking heads on CNBC and traditional media were having that debate, it's not debatable. It's just a matter of how deep does this go? Do we go into a recession, or do we go through stagnation? That's the only question I have. Now, again, from an economic perspective, the market is not a reflection of economics. I mean, the Fed can, pump in trillions and trillions of dollars into the stock market to keep the stock market afloat, even if we go through some type of economic stagnation.
But they're not going to put trillions of dollars into oil.
That's the case.
And so
oil is now obviously in the short term. We discussed this last week, 2 weeks ago, 3 weeks ago. OPEC's going to meet in early March, late February, and they're going to make cuts. That wasn't debatable either. And so I do think now that, you're staring down the barrel here with OPEC meeting on Thursday and Friday, they're going to make cuts. Now, how deep? And again, the only question is, how deep are those cuts, and does those cuts offset the supply problem? And to me, I just think we should all get ready to short oil again at $50.
If it rallies, because once again, headline news can only last so long. Do you think the market and algos are going to care 2 bits about IMF's decision?
Later tonight, they're done with it.
But ongoing economic problems, they remain constant. So the IMF can release a statement, and that's great, and that will trigger a short-term rally. And maybe if everybody does it, like shifts sentiment. Like that's the best case for bulls, is that everybody does, and like everyone becomes euphoric and bull. But those headlines go away, and then PMI numbers come out, and GDP numbers come out, and company earnings come out.
Well, and Mark, just wait another month. Just wait another month to where you're seeing European PMI numbers and you're seeing US PMI numbers. And again, the question is, again, it's not if they're going to contract, it's how far they're going to contract and how bad is the data. So there's a lot of variables here. There's no doubt about that, especially in the stock market. But for me, I just don't see oil as something that you could rely on over the next year in terms of appreciation. You're going to see global slowdown. It's absolutely happening in front of our eyes.
You can't not avoid, unless every Chinese worker and every South Korean worker is going to work and producing, fueling the supply chain, or unless those supply chains are magically reappear in other parts of the country, which is just obviously can't happen. It's impossible not to contract.
Yeah.
Mathematically.
I finally heard on traditional media, I finally heard this, and I was waiting for it. Okay. I finally heard somebody, and I can't remember who said it or what show, but I think it was on CNBC. They were talking about how Starbucks is reopening and how
which I mocked multiple times last week.
You know, and somebody finally said, but is there anybody there?
I know, that's what we said last week.
Yeah. We've been saying that for weeks, but is anybody there? That's a question. Just because somebody opens up doesn't mean there's foot traffic. And just because we start to see some data doesn't mean it's going to be applied in the long term. I'm very concerned from an economic perspective.
I mean, we have a damnable decision as a world, government leaders do. It's terrible. Draconian measures, because the only way this has been contained at all when it's outbreak is absolute shutdown, which we now see what the dramatic impact on the economy has from the early PMI Chinese numbers. So you have that, or you don't shut down and then the spread disease rapidly. Mm-hmm. Neither case is good for the economy.
Well, Mark, think about China for a second. In the last 24 hours, outside of China, you mentioned draconian measures, right? And draconian measures are things that you do that nobody likes but needs to be done. It's the tough decisions, right? And when China shut down everything a month ago, you know, they were criticized for it at the time by some people. But what's happened in the last 24 hours, you've seen a reduction in Chinese corona cases. Outside of China, 9 times the amount of cases, 9 times. Italy jumped by 500 overnight, 500 overnight. So, you know, if you trust the data, which, you know, I'm lukewarm on, but if you do trust the data, you got to give China some credit for that.
Yeah.
No, but it's still like, so even if like, I think this question has transcended, because all CNN and MSNBC and Fox News and all mainstream, they'll talk about headline coronavirus cases, a second death in the United States and all that. I don't even think that matters anymore. Now, of course, if it spreads in the United States, you're going to see a huge, the stock market is going to lose its mind.
It's a matter of how much does it spread and what actions do we take.
Sure. But companies are going to make less money. And so like those people are like, hey, this is the bottom, V-shaped recovery, can't miss out. Do you know what valuations on these companies are going to look like in the next earnings quarter?
Guys,
if the market just V-shaped recovers, it's like you're going to have beyond record valuation.
Prices are going down right now. PE numbers will go up.
Yeah.
Even though because revenues will decline faster than the price does. And so the valuations actually, like a lot of people are like, well, stocks are coming down, PE ratios are coming down. No. Revenue is going to come down to zero growth, and it's going to be zero growth over the last 2 years. Those PE ratios with the market still elevated will actually be worse value than they were even a year and a half ago.
Mm-hmm. And potentially dramatically. Yeah. Like, here's the thing about trying to do this. Nobody even came close. Not a single economist in the entire world that tracks Chinese PMI even came close at guessing what Chinese PMI numbers were.
They were 25%,
not even in the stratosphere.
They were 25%.
It fell off a cliff.
They were expecting 45, Mark. It came in at 35. That when you look at that, to some people like, oh, it's just a 10-point miss. That is an astronomical miss.
Well, and
Like, so
China's
like,
manufacturing is not like the U.S. manufacturing. I mean, that's the center part of their industry.
You're
There's no
right.
question
It's
about it.
far more important.
That's what I mean. Yeah. Yeah. I mean, it is for their economy is really important. And I actually saw anecdotally some really interesting evidence about how much their manufacturing has dropped. Matt, you and I were talking about it. Their pollution that you can measure from satellites, I guess, is lower than it's been in a very, very long time.
If there's a positive for the Chinese manufacturing shutting down, it is air quality in China.
Yeah. Yeah. And Cody, let me know if that's a little bit better. I'll turn up my outbound. My
You're
dog
still a little
kicked.
low.
All right. Let's talk a
all
little
right,
bit.
it's better.
Is that better right there?
Yep.
Very, very good. And the other thing
Now,
is, guys,
normally I don't care
got
what you have to
one-
say. So like, it's nice
But
not hearing your
again,
voice.
I don't
but-
believe that, Mark. I don't believe that.
in the short term, the Fed can prop this market up. The market will buy the Fed action. But guys, even when they went to zero interest rates in 08, the market still had a very nasty leg down.
Mm-hmm. Mm-hmm.
And that was not after a 2.5 to 1% cut. That was after a 5.5 to 0 cut. And the market still had a leg down. So to answer your question, your original question, Tim, am I buying this? No, I'm still very concerned. Now, don't get me wrong. I'm happy for people to get an opportunity to close out of positions they got beat up on.
You know, if you're watching our show right now and you come back each and every day, make sure you click the subscribe and the bell so that you are alerted when this show goes live. We're going to be breaking this down day by day. And if you are watching us right now for the first time, make sure you come and click that subscribe button. Likes and thumbs up, everybody. We always like to get those analytics up so that more people can see this real analysis.
Technically, real quick, Tim,
Mhm.
keep an eye on before I know we need to get into individual stocks here, but keep an eye on 3,000 on that intraday chart on the S&P 500. And also keep an eye on 3,050. That's right where the 200-day moving average is. If you do reclaim that, 3,200 is not out of the woodwork, sir.
Well, and I know that we could have a 2-hour conversation about what I'm going to say right now, but I will tell you this. This is the outcome of flawed economic policy from the Fed for 12 years. The fact that after 12% down, we have to cut 50 basis points just to try to keep a market afloat that's at an all-time high or near it.
I said this on Twitter last night. Somebody asked a question. Somebody made what the Fed's going to do. And I said, are you kidding me? The Fed acts like a new trader who's been trading for 2 weeks that capitulate to any volatility.
What else are they going to do here, guys? I mean, they are not just going to ease monetarily. And if this does continue to leg down, we spin into a recession.
The funniest thing is last week, the Fed was talking about how they're not going to capitulate to this volatility, that, you can't rely on the Fed put anymore, and a bunch of nonsense, quite frankly. And then just literally a week later, the market's like, we're going to sell until you capitulate. And who blinked first? It was kind of a game of chicken, and the Fed blinked.
Yeah. Long-term charts on crude oil, by the way, I did want to make one other point on that. I loved all the analysis, but 45, 46, guys, if we actually do trade and break below these 44, this little support zone, it's not been down there since the end of 2015, Matt, when it was in that full-blown bear market. There's not a lot underneath here, guys.
Well, I think you got to keep an eye on the retracement coming back up into 50. That's number one. That will be a bearish retracement. And if we do see some slowing momentum at crude oil at 50 handle, that's going to be a fairly decent shorting opportunity with the target of 45 by 42.5.
Yep. Gold is having a little bit of a relief rally. And I was not here on Friday. I was out in Atlanta teaching.
Stay on that weekly chart. I think the weekly chart's more important.
What was the sell-off triggered by here, guys?
It's very simple. It's very simple. And I've dug into this data quite extensively.
Mm-hmm.
And the data suggests one simple reality. When you look at all trades, all transactions, Wall Street institutions, every aspect of gold right now, you only see one aspect. It's not the individual consumers that are selling their gold positions. It's not you and I that are selling our gold positions. It is certain hedge funds who are selling gold to cover margin calls. That is the only thing that is happening on gold. And that's going to present a really good opportunity, in my opinion.
Oh yeah, I was all over. Like, we didn't spend a lot of time on gold this weekend on the Commodities Report, which thank you for the record attendance we had this weekend on Commodity Report Live.
Mm-hmm.
I was just like, listen, the fundamentals are stronger than they've ever been. And look at there's my girlfriend, the 9 on the weekly chart, just bouncing support, serving as a support.
I'm still bullish.
Has there ever been a stronger fund? And I'm not saying technical. I'm not saying behavioral. I'm saying, has there ever been a stronger fundamental reason to own gold than right now over the course of the last 15 years?
The only other debate, if I want to play devil's advocate, when quantitative easing
09?
was first announced and then fueled, and you saw gold skyrocket,
It went up a good 80% in that next couple of years.
then that would be the case I can think in my adult lifetime where the
Okay,
fundamentals.
let me ask you guys a question. Is the Fed in the next, say, year, are they going to go to zero interest rates?
I have a
God,
hard
I
time
hope not.
seeing them going all the way to zero in a year, but it wouldn't shock me, Matt.
Tim,
I
just in the next 6 weeks, they're expected to go down to 0.75.
Yeah.
Just in the next 6 weeks.
Based on supply chain and Fed reaction, like, once again, these are probability guesses. It's not the craziest thing somebody will say today.
I'm calling it by the end of 2021, we will have zero interest rate policies and we will have massive economic stimulus.
Wow.
And if that's true, you should own gold.
Yeah.
Oh, it's that simple. And that doesn't even take into account other monetary policies that might be created or implemented, quantitative easing style, that really serve as a huge
Or government stimulus either, Mark. That doesn't take that into account either.
Like, listen, like the devaluation of currency is just plain and simply one of the big prop ups of gold, and like there's no limit to end of story. That gold sell off we were talking about this week, and we all feel the same. Is like these are the opportunities you look for.
Yeah, the last time we saw a global coordinated central bank action was at the end of 08 coming into 09. That was the last time. And if you look at gold, let's kind of get a nice little, let's go to a monthly chart. Let's go back 15 years here. And the last time that occurred, what did you see gold do? It went from 700 to 1900. Okay. And an extremely bullish condition. And what are you seeing here? An extremely bullish condition in front of what we think the Fed is going to do. So are we going to see a repeat of that? I don't know. Maybe, maybe not. But if you do, get ready for gold at 2,000, 2,500, and potentially 3,000 over the next couple of years.
Dude, probably a good time to go revisit what Rickard said about gold, right? I mean, because a lot of what he's been talking about is playing out right now, Matt. Where the Fed is capitulating, they don't have a lot of easing tools, and gold has been bullish. And I'm not with Rickards that it's going to 10K. I think that's crazy, but maybe not.
Gold's not going to 10K without massive economic problems. And when I mean massive, I mean like global 1930s type depression type economics. And I just don't believe we'll see that.
Well, in the short term, guys, the market is bouncing. There's a lot of companies I do want to talk about here as we kind of transition into individual stocks here. Number one I want to bring up here is Apple Computer. Apple got an upgrade, and there was a bunch of anecdotal evidence. It was actually on our options report this week. And I think the logic, if you're going to buy something, a stock that's been the leader in the market, if you get a snapback rally, you're probably going to get it here, Matt. Beautiful candle on.
I said it last week. If the market's going to recover, it's going to be on the backs of Microsoft and Apple.
Yeah, but now it's got a troubling daily chart because you've already bounced now 6.25% in one day, and any further rally,
you're up 10% off the lows from Friday.
Yeah, and if you come into 300, aren't you hitting into some real
traders
troubling?
aren't trading Apple, investors aren't.
Yeah,
they're buying the dip in Apple.
Pretty impressive rally. GE, by the way, Jack Welch, who is the famous CEO of General Electric, he passed away, I believe.
Jack Welch was one of the best CEOs in modern history.
Yeah.
I read a thing that from the day that he took over to the day he retired, he increased the value of GE by 4,000%.
That doesn't surprise me. Jack Welch was, I mean, we like to look back at, the Walt Disney's, these great visionary CEOs. Jack Welch does not get the credit he deserves. He was a astonishingly, amazingly good CEO, great visionary.
Yeah.
And GE was never the same company when he retired.
No, it hasn't been, although it has been improving. I did read some news about one of the famous analysts who's been calling for GE to go bankrupt for a long time at JP Morgan. He was a stark bear, and he came out and said, I was wrong. I was wrong. He did not upgrade them to a buy, Matt, but he rated them a neutral and said the company's doing a lot of things moving into a
There was
positive
quite a bit of
direction.
upgrades today,
Yeah,
actually.
I saw it
Quite a bit
across
of
the board.
upgrades today.
Yeah. Another company grabbed my attention was Twitter, Matt. Elliott Management is a hedge fund. A big investor actually came in and purchased a lot of this stock. It did bounce the stock and gapped it out into about 8.5%, I believe. Messy chart here. Are you interested in a Twitter in a world of 2020 where people are going to be online? They're going to be debating. Is there anything here from you from a chart perspective?
No, not for me. I mean, don't get me wrong. I prefer Twitter in terms of just my personal like. I like Twitter more than I like some of the other social media platforms, but that's just my personal opinion. I like to utilize Twitter, but no, I mean, if you're looking at investing in a social media company, I mean, I hate to do it, but Facebook is the one you want to go to. They dominate the space. They're the monopoly in the space. Although you want to talk about a nasty candle, that kiss off the 200-day moving average is not good for Facebook. I'm also still, I know Pinterest has, kind of been in pain over the course of the last couple of weeks, that like many stocks are. But if you gave me Pinterest, Facebook, or Twitter, I would go Facebook, Pinterest, and then Twitter.
Yeah, I'm kind of in that same line. You could debate Twitter here, but Pinterest I still like, even though it did just collapse basically below the pivoting trend. Looked like it wanted a rally map, but the whole market just took this thing out.
Well, one thing about Twitter, Tim, is there is some thought out there that Jack Dorsey is not spending as much of his time as he needs to on Twitter. That he's basically, splitting his time between Square and Twitter, and so there's a lot of hedge funds who invest in Twitter that want to see him replace. So there's some of that going on right now too.
What you mean, moving to Africa, also running Square, and
yeah, I think some of the criticism is warranted.
It's legit. Yeah, I agree with that as well. Walmart, actually, a pretty interesting story. We've been
another upgrade today. Walmart got upgraded.
And they actually even came out and said they're going to partner, I believe it was with Verizon, to start implementing some 5G into some of their bigger stores, Matt. They're going to do 2 in 2020.
I think that's why they got upgraded, by the way, is that news came out. And obviously anything with 5G and whatnot is going to have a positive momentum. The 5G revolution is something that we've all kind of been waiting for in 2020. So obviously positive news, but we got it. There's no trade here. Obviously Walmart's more an investment type scenario. And I will remind people that Walmart did go up 22% in 08 when the end of the world happened.
Yeah, I do like the company. Obviously, all of these.
What's
rallies,
Costco doing today?
It's up 8% as well.
What?
Costco's kissing off the 200-day moving average. Mark's been watching too many Costco with no product on the crates.
Like, how do they not get a bump in their quarterly numbers?
Well, they got to keep. Well, they will if they keep supply up.
Yeah.
And hence supply chain disruption, right?
I'll tell you, on Saturday, Costco was full.
Oh, people were going to buy all the food they could, the water and that kind of thing. Yeah.
Water, toilet paper. This coronavirus is really kind of freaking people out, but I think we should all have some perspective there. The end of the world is not happening. The Black Plague is not happening. It's something we're concerned about. Obviously, it's going to have an economic impact, but I don't think we're all staring at death.
Sure. We will get Costco's earnings report Thursday after the bell, by the way, Mark. So we will get clarity on whether those numbers did come
that doesn't mean that the economic impact couldn't be catastrophic.
No, it's real. Don't get me wrong. I don't think the end of the world is staring at us.
No, this is not the Black Plague. I mean, the thing is, we know so much more than we did 5 weeks ago. Is this scary? Are people going to die? Is it going to spread? Is it likely to spread dramatically in the United States? Yeah, on all of those things. The transmittability is just too high. The mortality rate is just much lower than you had with SARS. But SARS wasn't spread as quickly.
What was SARS, like 6 to 8% mortality rate?
Yeah, but this is just spread more quickly.
This is faster. The spread is faster. Yeah, the spread is faster, no doubt about that. But
obviously, but
most people that get it, it's literally. I read some guy that got the coronavirus and was blogging about it, and basically his perspective was it feels like a cold.
I mean, I had a nurse, and once again, this is anecdotal evidence based on absolute.
And real quick, Mark, and I'll let you finish on. I'm not suggesting that the cold and the flu is the same as the coronavirus. It's going to have a massive economic impact, and it is a very scary situation. Again, I'm not that nervous about dying.
Sure.
From an analyzing the market standpoint, and once again, not in human terms, but this is what you got to do, right? When we're in the business, we've chose the business we've chose. We analyze, the economy and the factors that drive. I am far more terrified of the impact of supply chain disruption in the next 6 quarters and the massive hit everything's going to take. I am far more terrified.
Sorry.
I hate the sound of my voice.
I do too. that will ruin anybody's thought process. It will.
You hear your own voice and you're like, oh, never talk again.
Yeah, I listen to the podcast every now and then. And I'm like, oh God, Matt, just stop talking.
And I'm going to cut in for 1 second here, Mark, because I want you to finish this thought after I ask our audience one thing. Guys, anybody out there, have you canceled a work trip, a conference, not gone on a vacation the last couple of weeks, something upcoming? You're going to change your own personal behavior because of what's going on with coronavirus. I was in Atlanta over the weekend, Mark, and one of our students who's a halftime crew member, Steven, he was telling me that his work trip got canceled this week. He was going to do a 5-day event.
Conferences are being canceled around the world
for a big tech conference. And I think that even just that disruption right there, you're not in the hotel, you're not in the bar, you're not at the restaurant, you're not getting Uber to the airport.
Let me ask you, from a business perspective, Tim, the answer is yes. Most businesses that were going to have conferences or whatever the case, they're going to do teleconferences, they're going to do webinars, they're going to meet online, they're going to meet on Zoom, whatever the case is. So yes, from a business perspective, but I want to know from a personal perspective, has anybody here adjusted their lifestyle in the face of what we've seen over the course of the last 3 weeks? And my answer is no. I have not adjusted my lifestyle yet. I have washed my hands more, and like I've done that. Okay, Cody's laughing at that, but there's some inside jokes there. But I have washed my hands more. But it's not like I've stopped traveling. It's not like I've stopped going to the store. It's not like I haven't went out and bought a bunch of guns and ammo and food storage. Like I personally have not adjusted my lifestyle yet.
Mm-hmm. I haven't yet, but I've thought about it.
I have. This is how I did. I told my daughter on Friday night, I'm like, we're going to go eat fast food, and this can be the last time we're going to eat fast food in a while. And she's like, why? And I'm like, none of your damn business. I'm not going to scare my daughter. And so, of course, she chose McDonald's. And so we went to McDonald's, had a nice meal. And that's going to be the last time I eat fast food for a while. I do believe, based on everything you see, that this thing is in the United States. We've only tested 400 people. This thing is here, and we have no idea the magnitude. I do believe that there will be community outbreaks in the United States.
That's already happening.
Yeah, this is going to be a serious problem, and I'm not going to risk non-essentials. I don't have
send your child to school today, though.
Yes, I did send my child, but I'm not going to risk non-essentials like eating McDonald's.
There's not one scenario that spreads more sickness than school, though, Mark.
Yeah, but but I reserve the right to retract that statement if they release the McRib again here in the next week. Then that's worth risking death.
The McRib brings you back. That's your love affair with the McRib.
I'll risk death for the McRib. It's that important to me. So
I will tell you the one thing that I will not do until this stops. I will not take my family on a trip. Like that's the one thing. And I think that's very similar to a lot of people that in their everyday life, they haven't really made that big of an adjustment because, quite frankly, I mean, even though it is scary, we're still seeing limited numbers in the US. And I agree with you, Mark, that a lot of that is because we aren't testing, right? Mm-hmm. I mean, that's a lot of it, but I still sent my child to school today. I'm still going to send her to dance tonight, but I'm not going to go on a trip, which should tell you something about airlines and oil.
Sure. Yeah. And by the way, the airlines, the oil, it's all been down recently as well as the cruise lines.
Yeah. I mean, I said this last Monday and I'll say it again. One of the scariest coronavirus stats, because it relates to the unknown. We know it surges in countries. So when Italy spikes up 43%, it's scary, but that's already known, so it doesn't shock you. The scariest thing to me,
that's because testing's getting better and they're testing more.
Well, that's not what's happening in the United States.
I know, but I'm talking Italy, right? Because to go from 1,000 to 1,500 overnight, it seems like that's more of a testing, and that was really the real number all along.
Yeah, and so what is the real number in the United States? Because as of Friday, what was it?
Thousands and thousands.
468 tests. I mean, it was barbarically ludicrous, irresponsible how we approach testing of the coronavirus.
Mark, we had people, government officials, go into a quarantined area from people that came back from the Princess Cruise and literally just leave into the public, get on airlines. The number's thousands, guys. That's the truth.
That's just the way. I mean, no, I mean, but you know,
Most
testing
people
procedures.
won't even know they have it because they just think they have the common flu, and you know they overcome it, and you know a week later they feel better. They never get tested. I mean, that's the reality of the situation.
Well,
and not accept that.
I agree with that. And here's the thing, this story's not going away, because even the best case scenario I have read from health officials is that it's 12 months out before they have a vaccine, something to fight it off.
And Tim, even if it's 12 months out, that's still a record time in terms of getting a vaccine for.
I trust the Israelis. I do.
Well, I always trust the Israelis.
I trust. Those they are. I trust.
Well, I know, but in the U.S., you have to go through FDA approval. You have to get.
You'll see that fast tracked.
Yeah. Well, yes, but again, when you look at a year out, that's still a record number for a new vaccine for an illness, even a year.
Well, even if they try to fast track it, Mark, I mean, there are levels of approval they have to go through to test it to make sure it's safe on humans. I don't think the FDA and the WHO is going to just push medicine out there just because, so I still think it's probably 12.
You don't think the World Health Organization answers to government officials?
We'll see. But, it's going to be an ongoing story.
Well, I mean, let's talk about the testing, because the testing thing's a real thing. We haven't tested basically at all. And we're going to start to test a lot. What is the shock to the market? Because those cases in the United States are going to skyrocket. And once again, going to your point in Italy, Matt, not necessarily because of a spread of the disease, but because of the spread of testing.
The media, and it will happen in the U.S.
And then the media says the U.S. cases jumped 200%.
A hell of a lot worse than it really is, though. And that's what a lot of it sparks a little bit of this panic, and it just kind of it feeds the beast to a certain extent. So, yeah, it's going to happen, and the consumer base will panic. But the question is, doesn't Wall Street understand how testing works too, though? I don't.
Algos don't care about your testing procedures.
Well, no, but they do care about quantitative easing.
Yeah. Biogen here, Matt, are they one of the ones working on that vaccine?
They are.
Is that right?
Yeah.
There's going to be a lot of interesting opportunities up and down. And as we move forward, there's no question about it. Guys, halftime report here. We've hit a record of a live attendance. If you're watching our show right now, welcome to what we do here at Tackle Trading. We go live each and every day at 12:30 Eastern, spend 45 minutes to an hour breaking down the news, the markets, the charts, the stocks that are grabbing our attention, and try to have some fun while we're doing it. Matt, any last thoughts you got here before we kind of wrap up?
Just a couple things. Verizon obviously has got beaten up a little bit over the course of the last few months, but Verizon did get upgraded here today by, I want to say Cohen upgraded Verizon. Activision also got a nice little price upgrade, good little Tackle 25 stock. Held its channel, bounced off 56, and I believe they were. Let's see, I can't remember I'm reading it here. They were named the best idea by a company by the name of Stevens, and raised its price target on Activision to $72 a share. The firm's prior target was, I believe, $67 a share. Western Digital, WD, nice little growth company, also got upgraded here as well. And in our reports this week, guys, we wanted to basically, because there's not a lot of great swing trades right now until we see the market volatility kind of settle down, calm down, and be with us every day, obviously, as we break down the markets this week for you guys for the hashtag Team Tackle. But we wanted to put a list out there of potential good ideas, basically, that of stocks that we feel that regardless of whatever happens with the corona situation or the economic situation, that have held up to a certain extent versus what the market has done. So we didn't really do any prep work as we normally do, because again, there's not a lot of great swing trades until we start to see the market really kind of settle down. But definitely, use those as watch lists and ideas to kind of work off of as well. There's still some really, really good shorting opportunities in those reports as well. And we do have the Trading Justice podcast later today. So if you're not a subscriber to the Trading Justice podcast, you can do so on any app as well. And if you want to check out what we do at Tackle Trading, you can get a free membership to get all of our scouting reports, webinars, coaches shows, and everything else we do for our pro community by emailing team@Tackle Trading, or you can just click on the banner on Tackle Trading to get a 15-day free trial as well.
Yeah, and I think there was also a link in the comments below, so you can always
There always is
as well. Yeah, Cody's pretty good about that. Cody, always go through your process and do drop that link. Guys, got a lot that we're going to be talking about all week long. There's no question about it. Come back and join us tomorrow live for our halftime show. If you're watching this replay later, like, share, comment, let us know what we can do to help you. Great job today, guys. We are out.